Welcome to the Festival of Entrepreneurs, recorded live at the NEC in Birmingham. Over the next few minutes, you'll hear from some of the most incredible founders, investors, and business leaders who joined us this year.
Today, I'm hosting Paul. We're going to have what's called a fireside chat, but I'm going to let Paul introduce himself because I think it's important you hear from the man himself. Over to you, Paul.
Thanks very much, Lesley. And I'm Paul, the founder of Cloud Accounting Support Services, or CAS. We're trying to shorten it because it's one hell of a name. And we help entrepreneurs gain clarity and control on their finances. But we use cutting-edge technology. We're not in the old school, send us a bag of receipts and we'll process it. We're very much digitally driven. Only ever worked in the cloud. 25 years of accounting experience with 15 of that in the tech digital space. And we help small businesses scale confidently through proactive and smart tech-enabled financial practices. So again, we're trying to use the tech to help businesses grow quicker and more efficiently than those that are perhaps in old school systems.
And we're hearing about that a lot, I think, over the course of these 2 days, is how technology, and in particular AI, can help people to scale more confidently. And perhaps we'll come back to that a little bit later into this conversation. So you've worked with many founders, Paul. What do founders need to do to be really successful as far as their SME organization is concerned?
I think there's loads of things that they can do, but I think ultimately running any small business from the dining room table, or as you sort of scale, maybe the garage, it's not for the faint-hearted. And for us, there's courage, there's resilience, and to be fair, we've been on that journey, and I know you've been the same. And I think those first couple of years, sleepless nights, can we meet everything that we need to? But I think I'd like to just whack something out there to you guys. How many of you have felt at some point in your business journey, whether you are a couple of months in, a couple of years in, or are quite established, have felt that your business is growing quicker than your finances can keep up? I'd be interested to, because it's all right as putting loads of sales through, but actually sometimes the money element is the bit that's left behind. But yeah, I mean, it's quite interesting that growth for us isn't it isn't for free. And I think business owners sometimes forget as they scale, actually to scale, we need an element of cash in there. We can't just go, oh, I've made £100,000 worth of sales, but I've got nothing in the bank, which again, we'll touch on later.
Yeah, cash flow, I think, is such a big issue, particularly in the early years of being a founder. And I think part of the problem is, as an entrepreneur, nobody actually talks to you about those challenges. So you think, I've made X amount of sales, and therefore I'm sitting sweet in clover. But actually, a lot of those invoices take a long time to get paid, depending on your current payment cycle, your client's payment cycle, basically. So when it comes to challenges, obviously cash flow is absolutely one of them. What are the other challenges you think founders are facing right now?
I mean, the advent of tech and the way that AI is really pushing through everybody's business. And I think COVID was a massive change for us as an accounting industry around how to adopt, how to pivot, and how to embrace. And for us, it's embracing the change and not being frightened of it. Don't be frightened to look and put tools in to your processes to give visibility. And for us, visibility is key because, as you say, we've made all of these sales. I've got some money in the bank, but actually without the visibility of knowing what commitment, what liabilities we have against that money in the bank, we're doomed to fail. And I'll just give you an example. We inherited a business from an old school accountant. We like to use the phrase, And on paper, they were extremely profitable. I mean, they were talking about £500,000 worth of profit, but what they got was no money in the bank. So in essence, they were broke. They couldn't actually meet payroll commitments, even though on paper the banks were going, "Yeah, you're okay." But that liability side, that payment cycle for invoices suddenly caused a bit of grief.
So I know you talk about smart finance a lot. Exactly what is smart finance?
Okay, so for us, and and I've made some notes because this is really critical to just get out there. And yeah, technology,
This
really
is
good.
why I
Very,
have cue cards and I
yeah.
don't rely on
And I
technology.
thought I'll be really clever and have handwritten notes, but in a technical arena. So, but I will go old school. I will go real old school. Hold on a sec. So yeah, smart finance for us, it's about seeing beyond the basics. I think those businesses that only look at the basics of how many sales invoices have I raised, what's my VAT bill, what value is in the bank. I think they're the ones that potentially are the ones that struggle. So for us, that whole smart finance is looking beyond and trying to see and predict cash flows as they happen, talking to people and clients about um, payment terms that they're agreeing with uh, clients. It's looking and understanding where do things lie in a cycle. And let's take the VAT cycle. We know that if you're VAT registered, typically you can raise an invoice on the first of one month, but that might not get paid for 90 days. But actually, your VAT return ends at the end of that same month. So you're already now in a negative cash flow scenario. So we try and understand and put in those smart triggers, and digital accounting is probably the easiest one that we can talk about. I mean, we're heavily entrenched with Zero, but Zero, QuickBooks, Free Agent, anything that gives you real-time information. I think if you're working in spreadsheets and you're working in the shoebox, or you're working even on something like Sage Line 50 desktop, it's technically giving you old and outdated information rather than helping you predict what's coming. And that's where that's for us, the smart transition starts to happen.
And by the sounds of it, I know people are used to accountants who they essentially use them to file their company house returns, basically. And to a certain extent, that is just a snapshot of what happened, not what is going to
It's a
happen.
car MOT scenario.
Exactly that. So, what I am hearing is smart finance, and what you guys do is to take the information that people have and to be able to utilize it to forecast out. But do you also use it to reverse engineer for the perspective of where do you want to be, where do you want to grow to, and therefore how you use that information to
Yeah,
do that?
yeah. I was actually having a conversation with a potential client this afternoon, and that where do I ultimately want to go? We all go out in business because we want to retire with a chunk of cash in the bank, sitting pretty. But actually, how do we get there? And we use a little bit of I'm going to call it a line graph. Most people will want their business and go, well, we're here today and we're going to go all the way up to there. And that's what it looks like. That's their plan. But in reality, you are doing that all the time and you might end up in a few circles. So for us, it's just trying to help them see with what we consider the three shifts of finance. And that first one is we move from accounting to insight. We consider accounting is what's been. We can't change it, but we then can use that to give us those insights into what's going to happen, those what if statements. What if I take on my first employee, or what if I extend my payment terms with this client because they're going to give me a contract worth £1 million a year. So that transition for us from being traditional accounting into being more proactive and providing that insight suddenly makes a huge difference. Um, and the classic one is that little piece of knowing what your unit economics are. So, and what we mean by that is actually the cost and profit per item that you sell. So if you sell a little widget, what's it cost you to make and what's it cost you to deliver, and then ultimately what it costs you to sell. But those, we talk about forward thinking models. So very much get as a baseline model, that's where we're at. But actually what happens if we win that big contract? What does that insight look like? But likewise, if we get another COVID, heaven forbid, or we lose a contract, what impact does that have on our business moving forwards? So for us, the first shift that we impart to all of our clients is accounting is history, insights is where we're going.
I don't know about the rest of you, but the question that suddenly springs to mind to me is, why do all accountants not operate in this way?
I have to be careful because I've got my own mindset. We're all about empowering our clients. The client is key, and actually, to give them that information is far more important than me keeping it cloak and dagger and actually charging our client more for more insights. So we're very much in that mind of trust us to deliver, but you get insights into everything that we're working on. It's their business, it's your businesses. Why can't you see exactly what we're talking about? And I think if people are with the old school accountants, and this no sales patch, because I know that there are other accountants in the show, go and ask, are they forward thinking? Do they support you and give you access to your own data? If they do, brilliant. But if they don't, go and find somebody that will give them that shared data.
So smart finance is all about looking at that forward-thinking data. What else does it provide?
So, like I say, we talk about these three shifts. The second shift, and probably really apt in and around the entrepreneurs that are scaling, is that moving from how do we raise money into what we would consider um, smart finance as such. So it's that moving from I'm just going to take out a loan or I'm going to sell equity in my business to actually looking, are there different methods to raise finance for different things? Now, absolutely. We've all seen Dragon's Den and we've all seen the I'll give you 20% of my business for a few quid. But I think in that arena, it's more about they're tapping into who's investing for their network. But for us at a lower level, we don't have that. So it's then about how do we manage the cash that's in the business to make it work for us. So typically, if we're looking at going and buying a piece of machinery, we're an engineering firm, we need a piece of machinery and it's going to cost us 50 grand. What's the best way to finance that for the business for now and moving forwards? Because we might have 100 grand in the bank. Oh, brilliant. I can afford the 50 grand machine. I'll buy it outright without realizing there's that £75,000 worth of liability. So we try and help founders, business owners, directors look at a mixture of borrowing, whether that's asset-based finance, overdrafts, invoice financing, along with equity, sell if it's needed, and ultimately that gives them a picture of that £50,000 piece of machinery can be afforded, can help them grow, but we're not battering that cash flow again. But you can't do that without those insights. So again, these three pillars, they all kind of naturally fall in.
Yeah, I can see that. So that's the big picture. What can founders do? What tools can they be employing to help empower them more when it comes to understanding and utilizing their numbers more?
Okay, well, I think I'm just going to whack in our third pillar,
Yeah.
and I think that's important because it kind of brings it all together. And then, yeah, I'll answer that one. But the last pillar for us is actually we go from control to resilience. So what we're doing is when businesses come to us, invariably they've got the spreadsheet, they've got a bit of software that they've had custom written, but only they know how to use it, or there's one key person in their business that know how to use it. And actually that only works whilst that person's there, or that formula's right. And actually, if it breaks or the big red bus syndrome happens, they're suddenly left up the proverbial without a paddle. So again, what we try and do is move them from controlling to resilience. And by the resilience, we mean we put the right people in the right places, doing the right things, so that a founder can get on and do what they really want to do in their business instead of trying to keep it all cloak and dagger.
And when it comes to handing over their finances to somebody else, do you find that founders are quite happy to do that, or do they tend to want to hang on to it?
I think our experience is the creatives out there are more likely to go, yeah, please have it and get on with it because it's not their bag. But those are perhaps that are in more kind of, I suppose, service-based industries or buying and selling. They're more likely to try and hold on. And to give you an example, we have a client. He's a mechanic. He's done it all himself in spreadsheets. We moved him to zero. He then outsourced his bookkeeping to us, and ultimately his year end. But he still goes in and reconciles his bank, and yet he's paying us to do it. And it's about that control. He doesn't want to let go for fear of missing out, even though he's got all the tools and he gets all the reports. I think it's ingrained in a founder not to let go of the baby. It's our baby. It's our thing. It's what we've built. I don't want to let it go and I don't want to get it wrong. But when you trust people to take on marketing, and there's loads of that going around, accounting, sales, you've got to trust them. You're paying people to do these. Just let them get on and do what they're good at.
Absolutely. A lot of the stuff that I do in my business is around helping people to understand their behaviors around money. And self trust is a big part of that, because if you don't have self trust, then you find it very difficult to invest in your business to begin with. And if something doesn't go right and you don't have self trust, then automatically you feel as though, well, that demonstrates why you're not particularly good at something. So I think it's really important to understand your own behaviors and your own psychology around money when it comes to how you behave in in your business. So back to the question with regards to tools founders can be deploying to give them that sense of empowerment, I think the word I'm looking for is.
So there's four that are almost essential for anyone that comes on board with us. They have to take these four things really seriously, and if they're not the right client for us, and we are definitely not the right practice for them. But get yourself a one-page dashboard. Now, if you're using a Zero or a QuickBooks, that dashboard is in your face. You can't miss it. What's in the bank? All those key numbers. How much am I owed? How much do I owe out? What's my VAT return liability if you're VAT registered? So get that one-page dashboard. We try and keep that in software as opposed to pushing it down into spreadsheets, because again, the more you take data out of something, that's where the human error kicks in. And I've transposed a number, and that has catastrophic effects. But track those key metrics, runway. So that basically is how many months of operating costs have I still got in the bank? So we try and get guys to measure, have I got 3 months worth of operating costs in my bank, that if I stop trading today, we're okay. We talk then about cash conversion cycle. So how long does it take every pound that I spend on buying something in to convert that back into cash in my business? Debtor days. So how long does it take in customers to pay? Again, the shorter that, the better my cash flow. And if we can negotiate to get paid before we pay suppliers, you're on a win. But if you're giving your customers 90 days to pay and your suppliers are like, no, you're paying us on 30 days and we're going to put you on stop. If not, well, again, we're on a backwards trend. So all of those, and the one that we think is important, but it's really difficult if you're a one-off transaction with a customer, is your customer life cycle. So how much can you guarantee you're going to get from one customer before they disappear? If you're selling widgets, it's quite hard. But if you're selling services, you can certainly track how long that customer is likely to stay with you. We then talk about a 3-scenario model. So if you get into that growth phase, probably more than anything, look at a base model. So this is, where do I need to be, and what is, if you like, base model break-even point. But also, what are my best and worst case scenarios, which we touched on earlier? What happens to my business and my modeling on a best case? I land that big contract, but what's the worst case? So that actually you're not trying to pivot when one of those two things happens. You are operating technically with 3 models all running concurrently. Do a capital roadmap for the next 24 months. So try and understand, where am I now? What capital needs and cash needs are we going to need to scale? Because as we touched on earlier, profitability is not the same as cash. So let's make sure that we get that. And the last one is do a finance partner or an accounting partner test. And what I mean by that is, does your finance director have CFO, accountant, advisor that you're working with talk to you about the future or just the past? If they're talking to you about the past, then they're not going to help you get where you want to go. So I always encourage clients to ask us those sorts of questions rather than, can you save me tax? Yeah, all accountants can save you tax, but actually, can we help them get where they want to go? And if you can get that right, you're onto a winner.
I agree. And I think that is key. It is key in having an accountant who is future focused so they can be part of your growth strategy rather than simply someone looking over their shoulder at the car crash that went on as I were driving through, basically. So I'm going to open the questions to the floor shortly, but one last question for you before I do that. What's one golden nugget you can leave for people to take away today?
Okay, so the golden nuggets are those three shifts, those 3 pillars, whatever phrase you want to use. Try and change your business from accounting to insight. So try and get whoever you're working with to give you insights, not just the historical stuff. Design your capital. Don't just give away equity or take a loan out. And move to resilience from control. So that for me is the biggest single piece. If you can do that, you will absolutely get far better insights into where you want to go.
Thank you very much for your time today, Paul. If everybody would join me in thanking Paul, that'd be brilliant.
Thanks very much. Pick the right accountant and they will absolutely give your business the best chance to grow, but more importantly, to thrive. And that's not always us.
Thanks for watching this special episode from the Festival of Entrepreneurs. Our mission is simple: to help founders and business owners grow faster, think bigger, and take action. And if you were part of the event, thank you for joining us and being part of the community. And if you missed it, don't worry. We'll be back with even more ideas, inspiration, and opportunities to help you take your business to the next level. You can find out more and register for future events at festivalofentrepreneurs.co.uk.